Today, I want to talk about a very important strategy that you need to learn with options in order to make money consistently with very little risk. This, without a doubt, is the best strategy and the first strategy you should truly learn while investing, because it is the safest strategy you can possibly use in the stock market. And I'm going to take it step by step and explain how to do it, what it is, and why it's safe. If you guys have any questions, you can leave your comments below. Be sure to subscribe, tap the bell so you know when I post a video or go live. And if you guys enjoy the video, give me a thumbs up. Let's get started. I'm no financial advisor. I'm just giving you my personal opinion and showing you strategies on how you can grow your wealth and invest in stocks of your own choosing, because it's your money and ultimately your decision where you put your money. All I'm doing is sharing my opinion with you and teaching you the strategies that you can use to hone your skills to select what you would like to do with your own money. So first off, the stock market is very risky. And a lot of people, when they jump in for the first time or for the first few weeks, they want to start buying options. And I want to put the brakes on right there. I don't recommend buying any options. And I'm no financial advisor, and this isn't financial advice. I'm just coaching you to help you make more educated decisions. But I highly recommend ceasing the purchase of any options until you understand the leverage and the complexity of what goes on with options. First, we're going to start out quite simply with what are the different options? Well, there's only two options that are even possible to trade. One is a call, the other is a put. So what are calls and what are puts? First off, calls are when you purchase an option and you bet that the stock is going to go up. So if a stock is trading at $100 and you think it's going to go up to $105, you would buy a $105 call. If you think the stock is going to go down, that's where puts come in. So if you have a stock that was going to go down, let's say it's at $100 again, if you think the stock is going to go from $100 to 95 instead of 105, you think it's going to go down. So the current price is $105 and you think it's going to go down to $95. You would be buying a put. Puts are for when stocks go down, bearish. Calls are for when stocks go up, bullish. That's it. It's pretty simple, right? There's a little bit of a twist to it. When you're selling options, you sell a call. That means you don't think that the price is going to go up. That's a bearish strategy when you sell a call. When you buy a call, it's a bullish strategy. So you buy calls to go up. You sell calls when you think the price is going to stay the same or go down. With puts, when you sell a put, it's because you think the stock price is going to stay the same or go up, or it won't go down very much. When you buy a put, it's when you expect the stock is going to go down. So there's a little bit of a difference there. Selling calls is bearish. Buying calls is bullish. Selling puts is bullish. Buying puts is bearish. Bearish means you think the market's going to go down, and bullish is where you think the market is going to go up. Think of it quite simply like this. Bullish and green, up. Bearish and red, down. The most simplistic way to look at it. So as an example, let's say you find your favorite stock and they're $25 a share. Instead of buying the shares at $25, you'd be best to just sell put options to get into the stock at a discount. Let me show you exactly what I'm talking about. Okay, let's look at Palantir. Let's say that you're looking at this stock and you specifically want to buy shares. I do not recommend fractional shares or buying less than 100 because you can't sell covered calls. We will be getting into that in future videos. However, I highly recommend buying in increments of 100. So if we were to buy 100 shares of Palantir right now, you can see it would cost $2,418. What if I told you you could get paid? That's right. You could get paid the dinero to enter the stock at a discount. Wouldn't that be a great idea? That'd be great, right? It'd be awesome. Thank you. Thank you. All right, thanks. What if I told you could get in a discount? Someone's actually going to give you money. It's like, hey, I'm going into my wallet. I'm going to pay you to buy this stock. You want to buy it? I'm going to pay you to buy it. Doesn't that sound like a great deal? I mean, I think it's a fantastic deal. Oh, thanks. Thanks. Yeah, I'll take your money to go into the stock. Heck yeah. And you got any more money? Anybody got any more money? I'll buy stocks with your money all day. That's what we're going to do. I'm just going to buy stocks with your money. You want to give me money to buy stocks? Nice. I get to buy stocks with other people's money. Oh, yeah. Oh, give me your money too. Thank you. I'll use that money too. All right. I'm going to use your money to buy stocks. All right. Is that okay with you? I don't care. I'm going to take your money anyway. Can I have some more money? I'm going to show you right now how you can buy stocks at a discount and you can get people to pay you a premium to enter the stock. So first, you look at Palantir and you see that it's kind of in a downtrend. I'm going to show you what it looks like on TradingView. So here we are looking at Palantir on TradingView, and I prefer running the 4-hour timeline. You can see that Palantir after earnings has come up. It's very steady, and it seems like right now the floor and the demand zone is right around $23. And the price currently is at $24.18. So it's safe to say that we can sell $23 or even $23.50 puts all day long to get in. And that's how we find the bottom. Another way to find the bottom is the Bollinger Bands. Add Bollinger Bands to your trading view or your software of choice. I use the Bollinger Band to determine price fluctuation and the range of price. So you can see the Bollinger Band right here. You can use it on Yahoo Finance or anywhere else. Just make sure you open up and set the inputs to 20 for 20 days, SMA, and standard deviation to 2. The reason we're doing a standard deviation of 2 is because that's going to capture 96% of the data. And what that means is you can see there's a top here and a bottom. This is a price range. On the high end, we have $26.29, and on the bottom, we have $23.01. This is range that the Bollinger Bands has calculated to a 95% accuracy, that it's 95% likely the price will stay in this range. So if you sell an option that's at $27, it's like 96% chance it's not going to make it there. If you go to a standard deviation of 3, this captures 99%. So what that basically means is the chances of the stock price going above $27.12 right about here is less than 1%, because Bollinger Band standard deviation of 3 on a daily time frame means in any given day, almost impossible for the stock price to go above or below the Bollinger Band. And as you can see, this is our top and our bottom. It's 99% likely to stay in that range, meaning you are selling an option up here above the $27.12 price, or right here below the $22.19 price, that's less than 1% chance likely to happen. Unless, of course, there's a catalyst like a big news or an earnings event or something like that, which I'll explain to you in upcoming videos. You really want to use the Bollinger Bands, and I wouldn't recommend using a standard deviation of 3 unless you have high implied volatility, which yet again, we'll get into another video, because really what that is the more volatile a stock is with earnings coming up or big news catalysts, the price movements can fluctuate a lot. So you want to have a little bit more accuracy in the Bollinger Band. For now, we're going to use a standard deviation of 2, 96%, very accurate. So now that we've done this and we can see the true price action here of Palantir, it's safe to say that somewhere between here and here, 23 and 23.50 is the perfect entry point. If it was me, I like to collect a little bit of extra premium, so I would sell $23.50 puts. As you can see, from week to week, from Monday right here to Friday right here, in this area, it never went below. And in this area, it got down to around 23.41, and it dipped down here on Tuesday only a little bit. So you can see for most of the time, it's been since the middle of February since we've been below $23. So I would sell a 23.50 put or a 23 put. Let me show you how that would work and how you're going to get paid to enter the stock. We're going to come in here to Palantir Trade Options. We're going to set the date to March 28th, which is next week. However, this works at any time in the future and for any stock that you choose to invest in your portfolio. The timeline doesn't matter, although the date today won't match the date that you're watching this video. It doesn't matter because the strategy is the same. What we're going to do is we're going to come here to sell and top to put. So sell, put, and then we're going to come over here to a $23 put, and we can see that it's $12. Let's look at the delta. We can see the delta is 17. That means there's a 17% chance that this is going to happen. And because it's a stock that we actually want to get into, a 17 delta is actually a little too safe because you're not going to get as much premium. And the worst that can happen is you get to buy the shares that you already wanted to buy anyway. That is the purpose of selling puts. When you buy options, you lose money. It's like your money is just going away. Bye-bye. Bye-bye, money. I'm going to miss you. Yes, we're never going to see you again. This is the perfect strategy because the worst case scenario, you're not losing money. You're setting your money off. The price goes below. You get assigned and you just have to buy the stock you already wanted to buy, except you got paid to do it. Let me show you how to do that. We're going to look at the $23.50 put. You can see the delta's 28, much better. Premium's $23. Perfect. But hold up. It says 23 cents, Corey. I know, 23 cents. But every single option controls 100 shares. Whether it's a put or a call, every options contract controls 100 shares. So 100 times 23 cents is $23. So we're going to click on this put. And before we go further, you could sell a $24 put at a 42 delta. That's pretty high. You're very likely to get assigned. And even though it's more money, I think it's better off to go down to like a 20 to 30 delta, because you can run this for 1 to 3, maybe even 4 or 5 weeks before you get assigned. I'll explain that in a minute. So we've got a 23 put over here. Forget this over here, don't worry about that. Don't worry about this graph showing that your max loss or profit, because your max loss obviously is $2,300 because that's the amount it's going to cost you for the shares. Because of the strike price of $23.50, if you get assigned, you have to buy the stock at $23.50 times 100 shares, which is $2,350. It doesn't matter if the stock drops to $16 a share, which means you would be paying $1,600. It does not matter where the stock price drops to. If it falls below $23.50, your strike price on expiration on Friday, March 28th, or whatever day your expiration is, you will be assigned at this strike price no matter where the stock falls. So if Palantir is trading at $24, but then Friday, the day of expiration, the last day, the stock price plummets to $21. You get assigned at $23.50. So there is that downside. However, you have collected premium week in and week out to enter the stock, so you got to deduct that. Let's say 4 weeks in a row, I sell this put for $23. That would mean I would have collected $92 this month. So if I get assigned at $23.50 minus the $92 that I've collected over 4 weeks, I'm really getting into the stock for $2,258. So I have almost $100 discount. So if the stock price, let's say, happens to fall to $22, I'm not out $150 from $23.50 to the stock price at $22. I'm only out $56 because you got to take the $2,350 you pay at the strike price minus what you've collected in puts over the last couple of weeks or months. In this case, specifically $92, and that would leave $2,256. Minus, let's say the stock price is hypothetically at $22, you're only out $56. And then you can sell covered calls on this stock that you now own weekly between $20 or $30, which I'll quickly show you here. You can sell a call, say $22 or $13 a week, depending on which strike price, but this is for a different video. So you can sell covered calls and make money on the stock, and after a few weeks, you're going to break even and start going into the green really quickly. This is a very low risk strategy because the worst case, you're buying the stock you already want. So we're going to sell the $23.50 put. We're going to collect a credit of $23. We're going to hit continue. I'll probably set it to 24 because if the stock price comes down a little bit, it'll fill me at the ask price. And then we're going to select one, and you're going to need the collateral in your account to run this. So Palantir is going to require a collateral of $2,350. Hit review order. Of course, I can do this because I've got the collateral in my account to do it. However, if you don't have the collateral, you won't be able to run this specific strategy. You'll have to pick stocks that are within your budget, but anybody who has $2,000 or $3,000 in their portfolio or more, they can run this strategy on Palantir. You can do it on a cheaper strategy, and just as an example, I will show you. Another high quality stock that I really like that is a little bit more affordable for smaller portfolios is JetBlue. The options don't have as much liquidity or as much volatility. It's a little bit more of a stable stock than Palantir, and it's not in the AI sector. We can go ahead for next Friday and we can sell a put. JetBlue is a very good stock. Price at $7. I really would like to enter JetBlue at $7. That's a good price, or $6.50. However, 650 is an 11 delta. It's very unlikely to happen. That 11 delta means 11%, which means it's not likely to happen at all. I mean, 11% is not a high probability. If you want to get into the stock, 650 might not be a great idea. Not to mention it's only a $2 option. So not a good idea. A $7 option, much better. 39 delta, a little on the high side, but it's a high quality stock, and I would not mind at all owning JetBlue for $7. There is many large investors lately that have started noticing JetBlue, and Carl Icahn actually entered JetBlue recently and made a significant purchase. In my opinion, I think JetBlue is a really good stock, and you can collect a nice $11 to maybe $15 premium on a $7 put. We continue. I would set this to $12 or $13. If JetBlue falls to like $7.05, you'll get filled at $12. JetBlue is closed consistently close to $7 or above $7 every week. So this is a good way to get into the stock, and you probably could get away with doing this maybe 1, 2, or even 3 times, who knows. But if you can get a couple of these in, then you're making $24 to $36. By the time you actually get in, your average cost is not $7, it's more like $6.70 or maybe even less. So you just hit review order. You can see the collateral right there is only $700. This will allow you to get into the stock, and one that you can afford. That's a lot less than $2,000. If you have a larger portfolio, you can do the same thing on Apple or Palantir, Google's a a really good stock. Not a big fan of Nvidia. Very, very inflated. And in my opinion, it's kind of overbought at this point. If I had to choose, I prefer Netflix over Nvidia significantly. Netflix, in my opinion, I don't think it's overbought or oversold. I think Netflix, to me, is right where it deserves to be. In fact, I feel that Netflix is probably deserving of a little bit more. I think that we're going to see Netflix in the high sixes by the end of the year, maybe even a little bit higher than that. So if I had to choose between Nvidia or Netflix, really as an investor, I would much rather long-term invest in Netflix. I'm not a financial advisor. I'm just coaching you guys and showing you strategies and my opinions. So this way you guys can make your own decisions on where you want to put your money and which stocks that you would like to get involved with, and hopefully learn something so that you can invest better and take yourself in a direction of your choosing. Be sure to subscribe and tap the bell so you guys know when I post new content or go live. And if this video helped you out, give me a thumbs up. It really does help, as well as sharing the channel and the video with friends or communities that you're a part of. If you guys have any questions, be sure to leave it in the comments below. I respond to every comment because my goal is truly to help you grow your financial freedom and get better at trading in the stock market. We'll see you guys on the next upload or live stream. Take care of yourselves. Let's grow our wealth together. Take care, guys.